How's everybody doing? Welcome back to another episode of The Banker Next Door. I'm your host, Dr. Joe Berkowitz. I hope everybody's having a wonderful week so far as we kick off this wonderful Monday morning here, as it were. But today I'm going to bring you an update from the ICBA's Advocacy in Action for the fourth quarter of 2024. So this is something I've covered before in previous quarters. The ICBA, I think, always does a great job. They kind of put out a quarterly PDF document just going over like what's all the main kind of legislative issues going on in banking. And I love to just kind of put this out there just to share with everybody because I think it's great just to know, get a gist of what's going on. So there's a number of things here. So I'm going to try to blow through some of these things rather quickly. Some of these things I have covered in much greater detail in either other episodes or live streams, things like that. But like I said, I want to run through here. So the first thing up is the Farm Bill and support for agriculture. So it's a great bill. I hope it does pass, but this has been out there for a couple of years now. I mean, this thing has been languishing around. And unfortunately, an election year, it was a tough year to kind of get this thing done. I would have more hope that something will get done with this in 2025. Then we go down to the Durbin-Marshall Amendment, expanded legislation. So this has to do with like basically credit cards. So the ICBA opposes legislation to create new credit card routing mandates, expanding on the Durbin Amendment's interchange restrictions. So basically what's happening is that they're trying to create kind of a third rail for credit card providers. Like in other words, like you have Visa and MasterCard kind of dominating the market right now. And they want to basically say, well, no, you need to provide a third option for people, and so this has gotten very heavily contested. Obviously the credit card, obviously Visa, MasterCard, so on and so forth, they're not really fans of this. And there's not a lot of detail around there on this one as far as like how this would work or how this would play out. So I think that's kind of part of the problem here with it is that, trying to get people on board, like it sounds great on the surface, but when you get into when you dig into the weeds on it, it's kind of like, okay, well, who's the third provider going to be? How's that going to work out? Like, how are you going to work some of those different things in the system? And it gets actually very complicated. So more to come on that one down the road. Okay, we have the next thing up here. We have ACRE, so tax incentives for community bank agriculture and home loans. So ICBA is promoting the ACRE Act, which is this bill, which enjoys bipartisan support, would create a tax exclusion for interest income on loans secured by agriculture, land, and residential mortgages in rural communities. So again, that kind of ties in. This kind of ties back with like the Farm Bill and support for agriculture. I would assume that if it's got bipartisan support, that's something that would probably tie in with this bill up here at some point. So ICBA, the Check Fraud Task Force. So the task force, composed of more than 40 community banks and state bankers associations, was created to explore solutions to prevent, detect, and mitigate check fraud. The task force is just one component of ICBA's broader strategy to work with stakeholders in Congress, the agencies, law enforcement, and industry to reduce the burden of check fraud. And like I said, I just did an episode on, it says down here in May, ICBA published Check Fraud, a practical guide to altered, forged, and counterfeit checks for community bankers. So I did a whole episode on that. So if you want to go check it out, I think that was called, bear with me for 1 second here. I'll try to tell you what that was called. That was Review of ICBA's Check Fraud Detection Guide. So episode 252. So if you want to check that out, you can go check that one out there. But it was a good episode. Shows kind of the different tools and stuff that they're working on to try to get something done here. Check fraud is a massive problem in the banking industry. I'm probably going to do an episode coming up in the next couple of weeks on check washing, which is kind of an interesting component to check fraud. So keep an eye out for that if you got some interest in it. I think that might actually help people in kind of detecting check fraud and kind of figuring out what that is. But it's a good thing. It's a good thing that ICBA is doing this task force and trying to figure some of this stuff out. And okay, so next up we have Restricting the sale of trigger leads. So this is really important. So basically what the credit agencies are doing is the three main credit bureaus, Experian, Equifax, TransUnion. When you go to apply for a mortgage, the bank pulls your credit report. Well, then you immediately start getting a gazillion phone calls from all these people out there. Oh, hey, we'll get you from all these mortgage companies. Oh, hey, we'll get you the best rate. Come work with us. Like, it's fine. Like, come on over, whatever. And people are just get inundated with dozens and dozens of phone calls within, like, all of a sudden, you're literally within a day, your phone starts ringing off the hook and you're going, what in the world is going on here? Now, this is a problem because a lot of people blame the bank. A lot of people go back to the bank and are like, oh, the bank must have sold my information or the bank must have done this. The bank didn't actually do anything. This is coming directly from the credit, bureaus. They are, once they see the credit pull, they are selling that out to thus the trigger leads. They're selling these trigger leads out to these mortgage companies who are then, all getting on the phone and calling you up and buzzing your phone off the hook. Why the credit bureaus thought that this was a good idea or that they could do this, I have no idea. I can't speak to that, but it's been a horrible thing. It's been a bad thing, and hopefully they will get this legislation passed in next year. I mean, I can't imagine this wouldn't be. It says that this is a bipartisan bill, which I would hope it would be, and hopefully they'll get this thing fixed and get that one taken care of. But it's just something, kind of good to know what's going on and why it's happening. So 2025 tax legislation. So the expiration of provisions of the 2017 Tax Cuts and Jobs Act at the end of 2025 will trigger broader tax legislation. ICBA is positioning itself to protect community banks from any tax increases and to obtain targeted tax relief. Yes, this is something big that Congress is going to have to address next year. They're going to have to figure something out. And I would say, unfortunately, despite the rhetoric on both sides of the aisle, I don't really know how we get away with reduced taxes, just considering where our national debt is and everything else. I got to believe that, unfortunately, we're going to. I think so. Some things will get cut. They'll do what Congress does best. They'll throw a couple goodies in there. I call it, sprinkling the turd. They'll spray paint that bad boy and they'll throw some Jimmies on top and say, oh, look at how delicious this is. Meanwhile, hold your nose and run away. Anyway, that's highly technical verbiage there for you, in case you didn't know. Anyway, all right, the next thing we have is challenging reckless junk fee rhetoric. So ICBA is aggressively challenging the mischaracterization of legitimate overdraft fees and credit card fees for late payments. These clearly disclosed fees make possible services that consumers seek and rely on. So here's my take on all this. This is on the overdraft fees or whatever. So the CFPB, in their infinite wisdom, decided to demonize overdraft fees. Okay, the problem, in my mind, is not in the overdraft fee itself. It's the fact that, when somebody overdraws their account, there are certain things that banks will do that basically will cause the person to keep getting hit with fees, and it racks the fees up, and that there, in my mind, lies the issue. It's like you need to. Sometimes you do need to work with people and basically say, hey, listen, like you overdrew your account. Let's get some of that back down. Let's get this fixed, whatever. But a lot of times banks just, they just rack up the fees. And, somebody ends up getting hit with 7, 8, 9, 10 fees, and they go into the bank and then the bank goes, oh, okay, listen, we'll waive, maybe 3 or 4 of the fees, but you're still going to have to pay 6 of them, and the person goes, oh, okay, that's fine, whatever. And then they end up having to pay, which could ultimately amount to a couple $100 in fees. That, in my mind, is the issue. But because the reality is, you need to have, there has to be some kind of deterrence to, overdrafting your account all the time. You shouldn't be able to just overdraw the account. Because then in a way you are technically using that account. It's not a checking account anymore. It's now become like a line of credit, and the bank is now floating you funds. And that's kind of wherein the issue kind of lies there. And it's a technicality, but it's still where it lies. So, I mean, I think that there has to be a deterrence there for people overdrafting their accounts, for people, putting in bad checks, that return deposit items, that kind of thing. But I think it's in kind of the games or the way that the banks work it, especially at some of the bigger banks, where, like I said, where people just keep getting the fees, just basically keep racking themselves up. And I think, to me, that's really what's at the heart of this issue. And so I think this idea where it's like, oh, well, fees are good, fees are bad, and we've now created this kind of black and white scenario, whereas the reality was it's more in the middle. Like, there's nothing wrong with the fee itself. You need the fee, so it's having the fee there, I think, is fine. It's in the process of how that fee is getting charged, and how the bank handles the overdrafts, and the way they're racking those fees up on people. I think that, to me, is more the issue. So, but anyway, okay. So let's move on here. Cannabis banking. So ICBA supports legislation that would create a safe harbor from federal sanctions for financial institutions that serve cannabis-related businesses in states where cannabis is legal. This issue has been out there for years and years and years. I think that this will continue. I think this issue will continue to meander in the Congress for a long time. I don't know that we will have a satisfactory resolution to this anytime soon, because I think you have it's a very interesting topic, in a sense that the way that the politicians vote on it, because you have, I think, a lot of Republicans are in favor of helping the banks, but not in favor of legalizing marijuana. Whereas you have, on the Democratic side, you have people that are in a certain respect kind of in the middle. Like, some people want it, some people don't want it. Some people want to work with the banks to solve the problem, because depending on what state you're in, like if you're in Colorado, you want to help some of the banks and the consumers in Colorado reduce this issue. So some people are for it, some people are against it. It all depends on kind of like what state you're in, and what's going on in your world, I guess, at that moment. So it's a very difficult bill, and I don't see any resolution in anytime soon. So here's a hot button. Here's a big one. Central bank digital currency. ICBA opposes a U.S. CBDC, which would compete with community bank deposits needed to fund local lending and undermine consumer privacy, among others. ICBA supports the CBDC Anti-Surveillance State Act, which would prohibit the Fed from issuing a CBDC, passed the House in May. So here's my thing with that. I absolutely agree with the ICBA and other banking associations on this 110%. We don't want a central bank digital currency. That is, to my mind, that is the worst thing in the world. I will talk about that, and I have talked about that in previous episodes. I will talk about it more in future episodes, a lot more in depth. But I am adamantly opposed to a central bank digital currency. We do not want that in any way, shape, or form. The problem is, this passed the House, but it's never going to get through the Senate, and obviously in an election year, it's basically dead on arrival. We will have to see what happens next year, but on the other hand, the Fed wants this. The Fed wants this. The federal, not only the Fed, but you've got pretty much the Bank of International Settlements. You've got 80 something federal banks or central banks around the world. They're all working on this. They're all working on tokenization. They're all working on central bank digital currencies. They're working on a wholesale digital currency for central banks. They're working on a retail version for individuals, for people and businesses. So they're working on this. They're running full speed ahead, as if this is going to become the standard. This is going to become the thing. Paper money is going to go away. We're just going to have everybody in the world is going to be on a central bank digital currency, and that's just how things are going to be. So I don't care what the Federal Reserve says. They want this. They're building toward this. And even the Fed now is not directly related to this, but it is part of it. It's part of the larger plan. And you can see that the Fed now system is built on a blockchain system. It would be very easy to swap in a central bank digital currency on the basically the rails of that system, if you will. So you could kind of see, you see where they're going, and that's where they want to go. So, but like I said, I think that this will continue to be a huge hot button issue in the next couple of years, and we'll see what happens there. So Some more, crypto asset or crypto related things. So obviously stable coins, decentralized finance, unregulated crypto assets, including stablecoin, as well as decentralized finance, threaten to disintermediate community banks and heighten risks for wider economy and must be appropriately regulated. Yes, I agree with that. I didn't necessarily agree with it before, but that was before we had the banking crisis last year in 2023, which was caused by cryptocurrency. And I believe that we do need to have some regulation now. We do need to have some things that need to, kind of more legitimize these assets. But there's again, there's a lot of reasons for why I think Congress and a lot of politicians have not tackled this. I'm not gonna state those reasons at the moment. Because I don't want to go too far down the rabbit hole, as they say. But I have some theories. But anyway, all right. Let's see what else we got here, real quick. ICBA anti-credit union, something's wrong campaign. Obviously, the banking associations are not happy about credit unions buying banks. You've had a record-setting year for that. You've had 19 transactions this year of credit unions buying banks, an all-time high. Not a good thing, considering that the tax benefits that credit unions currently have. So obviously more will be coming on that. Federal Housing Finance Agency, ICBA, has registered strong opposition to changes contained in recent FHFA RFI that would alter the Federal Home Bank's mission. I absolutely concur with this one 100%. I will be doing a full episode on this to dig more into this issue, because I think it's a very important issue to look at. What else do we have? Section 1033 exemption, that's open banking. I just talked about that, the live stream from 1024, the strategy room live stream. If you want to learn a little bit more about open banking, go take a look at that. I did an episode on open banking earlier this year, and I will be doing a further update to that, because I think that, again, is another huge, just like beneficial ownership information, open banking, these are huge, enormous issues. I can't not stress them enough. You should be adamantly opposed to open banking. I'll just tell that right now. Banks, every bank in this country should be opposed to open banking. It's going to, in my opinion, it's going to bankrupt a lot of banks, but we'll see what happens. Strong support for a bill to close the ILC loophole. Again, I would love to see that, but it's been out there forever. Hopefully something happens again next year. Prescriptive and intrusive FDIC corporate governance proposal. So ICBA opposes the FDIC's recently proposed guidelines that would raise the bar for the independence of board members, making it harder to recruit qualified directors and heightened liability risk for bank directors and officers among adverse changes. Yes, I would again agree with that wholeheartedly. ICBA litigates the CRA and 1071 final rules. Yeah, I mean, again, more kind of nuttiness on the part of some of the regulators right now with the CRE rule, the 1071 final. So the 1071 rule, that's from the Dodd-Frank Act. That's basically just requiring banks to collect a ton of new information on small business owners. Things that they already, like demographic information, all kinds of stuff that's already done as far as on residential mortgages, home equity loans, consumer loans. That stuff is already collected on those loans, but it has not yet been done on small business loans. And now they want to do that. And that's what the 1071 rule is. Improving M&A regulatory framework. Obviously, that's a mess right now. I mean, the length of time it takes to get a deal done right now is just it's kind of ridiculous, and it's hampering the M&A market, I believe, to a certain extent. Bank performance, I think, is and interest rates and all that right now are a much larger issue, but certainly the regulatory framework is a big impediment at the moment. And then the last thing is the EGRPRA review. So ICBA is calling on regulators to conduct a comprehensive regulatory review under the Economic Growth and Regulatory Paperwork Reduction Act. So yeah, okay, sounds nice. Like it. Go from there. So, okay, all right. Well, that's what we've got for the ICBA Advocacy in Action for the fourth quarter of 2024. So you could see that there is just a ridiculous amount of stuff going on right now. So a lot of big issues out there. I will cover, like I said, some of this stuff I'll really get into here in the next weeks and months ahead. as we have updates and things continue to unfold. A lot of these issues, unfortunately, I think are going to have to wait until after the election, till next year when we have a new Congress. We will have a new president one way or the other, because Joe Biden will not be the president come January. So it's either going to be Harris or Trump. And we'll see what we'll see what happens. We'll see who gets elected, and then we'll see where we end up at the end of the day. But if you like this episode, please make sure to like, share, and subscribe, as that really helps the channel. Remember, we are on YouTube, Rumble, and all major podcast platforms. Please be sure to leave your comments down below, as I love getting back to people. Please make sure to check out some of the other content on the channel, and I will be back to everybody again real soon. Thanks so much.